Now let's get across some technical analysis. I'm joined now by Tony Sycamore from IG Markets. So we saw a fresh record again overnight on Wall Street.
It's a giddy mix for US equity markets this week. We've obviously got easing trade tensions, we've got AI news galore, and of course a Fed rate cut about to be delivered alongside some very important earnings. And what that's combined to do is to send the Nasdaq and other key indices to fresh record highs. It has been an extremely impulsive move higher. We're seeing it as a fifth wave in an Elliott wave framework, which is the final leg of an impulsive move, if you like. But at this point of time, there is no evidence yet that that final leg is complete. So what we're watching for is some really important levels in the Nasdaq, coming in around 25,000 initially. This is the Nasdaq 100. You can see that yellow band of support, the top channel there. That comes in around 25,000. If that was to break, it would be a minor concern. The bigger concern would be if it was to break below support coming in around 24,000. And that really would signal that, hey, look, this rally's been extraordinary. It's come a long way. And now we're going to see a pullback. But until we break the first of those yellow lines, things look pretty good for the Nasdaq to continue higher.
And where do you see the ASX going? Of course, it's been trading near record highs, but a possible rate hold by the Reserve Bank seems to have stopped its momentum.
Spot on. For the month of October, the ASX 200 is one of the laggards, if you like. We've got the Kospi in Korea, the Nikkei flying, obviously the Nasdaq doing well. Even the FTSE doing very well in the UK. But here in Australia, it hasn't been the most exciting rally. Sure, we've made a couple of fresh record highs this month, but it hasn't been, as we said, that excitement which we've seen in other markets. You look at the Kospi, it's up 16%. We're struggling to be up 2% at this point of time with a couple of days left to go. So that, as you mentioned, is to a large degree the concerns around this inflation data, which we have shortly, the fact that it may keep the RBA on hold. It does sound like they would see a print of 0.8 or 0.9 as a good reason to stay on hold and wait for another labour force report in mid-November. Lo and behold, if that labour force report shows the employment rate ticking up from 4.5 to 4.6 or 4.7%, there's going to be calls for more aggressive rate cuts at the December meeting. But that's the line which they've chosen. And what it has done for the ASX 200, along with some stock-specific shocks, it's kept it trading around that 9,000 area. So a lot riding on this inflation report due out shortly.
And what about Bitcoin prices? They've been trading lower.
Yeah, look, I mean, given what's happening with equities, and we see Bitcoin often wearing the risk sentiment hat, it just hasn't been able to do that. It really isn't recovering from that shock we saw at the beginning of this month, the flash crash, and we're seeing a lack of fresh news. And for me, what I'm seeing there on the charts isn't particularly positive. Yes, it's above the 200-day moving average, the yellow line, but I don't like the way that it's rejecting that resistance up around 117,000. So if we're to see further downside from here below that orange line, the 200-day moving average, I think we're probably likely to see a push into the mid-90s, low 90s as it completes that correction from that record high we struck earlier this month.
Now let's have a look at gold. It slipped back again on that US-China trade optimism.
That's right. More of the safe haven bid being unwound from the gold price. And obviously the rally from the late August lows there around 33.11, just extremely overdone. And now we're working off that overbought reading, those hot flows which came into the market very, very late. I see, and I've mentioned this previously, I think we're probably likely to see a 20% pullback from the highs, which only takes us $300 lower. It takes us back to around 3,500. And that's something which we saw in August 2020. It fell from 2,075 down to 1,675, a 20% pullback. That's what I'm looking for gold at this point of time.
And how about the Australian dollar? Hit a 3-week high overnight on expectations that the Reserve Bank will hold next week.
So the Aussie's been like a spider crawling across the screen there with trailing a trail of ink. But right now I'm seeing some exciting signs here. In mid-October, we tested the bottom of the 5-month trend channel support around that 64.50, 64.60 area. Got below there a couple of times, but the support was reinforced by the orange line, the 200-day moving average. Now we're starting to drive away from that support. And I suspect that providing the inflation numbers aren't exceedingly weak today, we're going to see the Aussie trade up towards 66 cents. And then above there, we can test the top of that trend channel coming in now around 67.30. So I like what I'm seeing here in the Aussie. You've got some excellent guardrails. You've got the bottom of the trend channel. You've got the 200-day moving average, and you've got some August lows in that 64 20 to 64.40 support area.